Good morning. This is Larry McMillan with a stock market update on Monday, June 16th. The market has the chart of the market is still positive, and the S&P, from looking at just the chart, it looks like it's going to try to make a new all-time high. However, we are seeing some deterioration in the internals, and so that's a bit of a concern. But unless prices break down, it's really immaterial. The S&P last week had a minor high around 60.60, and then of course the all-time highs are up at 61.50, and so that's what we're watching as resistance. There's various support levels from essentially about 59.20 all the way down to 5700, so that's a positive sign there as well. The equity-only put-call ratios, however, are turning over to sell signals, and that's not a good sign. Those are usually pretty accurate but longer-term indicators. We've been on buy signals from them since mid-April, and so now they're rolling back over to sell signals. They could be stopped out, but right now that's a sell signal. Breadth also has deteriorated, and we have a sell signal from New York Stock Exchange breadth, but not from our more important, what we call stocks only breadth. That's all stocks that have listed options on them. So we're watching that as well. New highs versus new lows is still nowhere. I mean, neither new highs nor new lows has been able to register 100 issues on any day. So that indicator just remains in a neutral state. VIX has become a little more interesting. We had a couple of buy signals actually, in the last 2 weeks on VIX, the spike peak buy signal and then the trend of VIX buy signal. But now VIX is jumping higher again as of Friday. Today, with the market rallying strongly, perhaps that will dissipate. But both of those buy signals are in jeopardy of being reversed or stopped out. So right now, I would say the VIX picture is just modestly bullish. The construct of volatility derivatives is bullish, though. The term structures have continued to slope upwards, even with some selling last week in the market, and so that's a positive sign. So overall, the internal indicators are a bit mixed, but the chart of S&P is positive, and that's enough to keep us on watch for S&P to go to a new all-time high. After that, we'll see, what happens. I invite you to visit our website, take a look at our daily letters where we keep up to date on these things in a more timely manner. And meanwhile, this week has a holiday, Juneteenth holiday on Thursday. But have a great rest of the week trading.